Let us see the next question. Let us see the next question. A United States of America based company is planning to set up a software development unit in India. So US company is considering to start up a software development unit in India. Software developed at the Indian unit will be bought back by the US parent at a transfer price of 200 lakhs US dollar. The unit will remain in existence in India for 1 year. The software is expected to get developed within this time frame. So within 1 year it will be developed in India. Next, the United States of America based company will be subject to income tax rate of only 30% and withholding tax of 10% in India. Withholding tax is nothing but whatever the amount that you repatriate from India to America, of that 10% is required to be paid in India as a tax. So for example, say an amount is supposed to be transferred of 1 lakh rupee over there, then in that case instead of 1 lakh you can transfer only 90,000 because 10,000 is required to be paid in form of withholding tax and will not be eligible for tax credit in United States. Even otherwise we do not make that assumption. Software developed will be sold in United States market for 240 lakhs dollar. So they will purchase from its own subsidiary at 200 lakhs and will be sold over there for 240 lakhs. Other estimates are as follows. Rent for fully furnished unit with the necessary hardware in India required for rupees 20 lakhs. Manpower cost 160 software professionals will be working for 10 hours a day and the rate is 600 rupees per man hour. Okay, so we understand that say 600 rupees for 1 man hour into 10. This is what's the wages of one worker for 1 day into 160, that is the number of workers, into number of days in a year. This is the total wages. Simple administration and other cost 24 lakhs. Advise the United States company on the financial viability of the project. Rupee-dollar rate is 67 rupees per dollar and assume that there are 360 days in a year. So it is into 360, that is what we understand. I want you to tell me answer of the question, that's whether the US company should develop the software in India or not. Let us see that's how we can do answer. Everybody is requested to write down answer along with me. Along with the working, you will definitely understand, and of course I am also going to give you explanation. Working note number 1. Calculation of profit after taxes for Indian unit, in bracket I am writing in a rupees term. Friends, over here it is very simple for us to understand that in the entire question we have been provided with only one exchange rate and all other things have been provided to us in rupees term. Of course the transfer price is provided to us in dollar term. So 200 lakhs is the amount which the Indian unit will receive. So from the Indian unit point of view, we can say a kind of sale value of software is 200 lakhs multiplying with 67 rupees per dollar. So it comes to 13,400 lakhs. This is the revenue minus all expenses which they have provided, less rent. Rent expense is 20 lakhs, less manpower cost. We understand that say 600 rupees is the rate per hour into 10 hours working for one employee into 160. This is what's the wages for one day into 360. 600 into 10 into 160 into 360 divided by 1 lakh, that comes to 3456 lakhs. Okay. Then administration cost, an amount of 24 lakhs. Dear students, all these expenses will be deducted from the revenue. So it is 13,400 minus 20 minus 3456 minus 24, 9,900. So profit before taxes is 9,900 lakhs. Okay, what is income tax rate? It is only 30%. So tax is required to be paid to the Indian government, 2970 lakhs. Profit after taxes is 70%. It is 6930 lakhs. This is the amount of the profit after taxes in the Indian unit. Okay. Now friends, we understand that say whatever is the profit which is there in India is basically belonging to the US company only. So this profit is basically belonging to that the US company. So this amount is required to be repatriated over there. So we will have working note number 2, amount of dollar to be repatriated to United States of America. In that we understand profit after taxes 6930 lakhs. It is in the rupees term. This time you have to pay less payment of withholding tax. It is at the rate of 10%, 693 lakhs. So amount repatriated is 6237 lakhs in rupees term. So again amount repatriated, which we will compute in dollar currency term, 6237 lakhs upon the exchange rate is 67 rupees per dollar. So 93.0895 or 93.09 lakhs dollar. Now we understand that say from the US company point of view, understand it logically. Purchasing the software at 200 lakhs, yes. Selling at 240 lakhs, yes. So you make profit, yes. You make profit in the domestic business and along with that, say you are able to receive this much amount of the surplus from the Indian unit. So definitely, like, development of the software is beneficial to them. So write down final answer. From US company point of view, comma, software is purchased at the rate of 200 lakhs dollar, comma, it is sold in domestic market for a price more than 200 lakhs dollar. In bracket I am writing 240 lakhs dollar. Full stop. With paragraph write down. In addition to that, amount repatriated from Indian unit 93.09 lakhs dollar. Full stop. So from US company point of view, comma, software should be developed. Full stop. With paragraph write down. Withholding tax means tax to be paid at the time of repatriation of funds from one country to another. Full stop. So over here we take a decision that the software should be developed.